Hey there, welcome to the market update for the first 3 weeks of April 2025. I'm Ted Thatcher, president at Bright Lake Wealth Management, and I wanted to dive right into it with you. Obviously, a whole lot is going on in the marketplace right now. There's so much discussion around what's happening with tariffs and what's happening on the whole economic policy picture coming from the Trump administration. And on top of that, we still have a whole bunch of questions that the market's trying to get answers to on the fiscal policy side. And so I just kind of wanted to walk you through really what we're seeing and what the main drivers are. So as you've seen in the news headlines, on April 2nd, Liberation Day, as it was often cited, Trump announced a whole new set of tariffs, and the market had a volatile response. It dropped quite a few thousand points on the Dow, huge percentage losses in a couple days. And then a few days later, those tariffs were amended, and Trump essentially put a big bullseye and focus on China specifically. And so you saw this whipsaw in the market really quickly as the market, again, was trying to figure out what to expect when it comes to the economic and trade environment. Essentially, tariffs are like a big toll booth that have gotten thrown into the trade picture around the world. And so ultimately, what the market hates more than anything, regardless of who's president or what policy is being announced, what it really doesn't like is not knowing what to expect. Because in the public markets, of course, companies trade on a multiple of the earnings that they show. And if the market can't figure out what those earnings are going to look like, it's really hard for, price stability to actually occur. So as we get more and more clarity about really what to expect when it comes to tariffs, that's where we'll actually see price stability come back into place. So that has really been the focus, especially on the economic policy side. Now, of course, on the fiscal policy side, we're really looking at those economic vital signs, as I've referred to them before. The GDP, the gross domestic product of the United States. How much are we going to grow? At his most recent meeting, Fed Chair Jerome Powell actually changed the expectations of the growth of the country and revised the GDP estimates down to 1.7%. That's a pretty big step down, actually, and it basically means the economy isn't as strong as we were expecting. Also, a couple of the other signs we've been looking at are, of course, the jobs numbers that were recently released. They've been tipping up and down a little bit, but there are some signs that the job and labor market is weakening a little bit. And then one other thing that we've also been looking at is the CPI, the inflation rate. Now that is at an annualized rate of 2.4% year over year. It's come down. The rate of inflation has come down substantially in the last 12 months, which is a good thing, but the Fed is still targeting that 2% number. Luckily, we are trending toward it. Now, of course, that doesn't mean that prices have gone down. It just means the rate of increase has slowed. And so essentially where we look forward to now in what the market is looking for is really what direction the Fed is going to take with interest rates. There was a little bit of bickering that had recently happened between the president and Jerome Powell as to what direction the Fed should take and how quickly ultimately they should lower interest rates. Of course, the Trump administration has made it very clear, really since Trump was reelected, that they want to see those rates come down. And Jerome Powell has ultimately really taken a wait and see approach with interest rates. I think a reasonable criticism of Powell has been that he has been a little bit slow on these moves. I think they may have waited a little bit too long to hike interest rates up. And that continued criticism essentially is that he's maybe waiting a little bit too long to start the lowering cycle, at least in the way the administration would like, certainly. And I do think that there's some data to support that criticism. That said, the markets, again, don't like uncertainty. And so when you see the executive branch and the central bank going at it, that is not a formula for stable prices or stable markets. And so hopefully that rhetoric will, be toned down a little bit and that we can actually see a path forward come into view with both the central bank, the Fed, and the administration on the same page so we can actually get that stability that I think a lot of Americans are really looking for. This has been your market update for the first 3 weeks of April 2025. If you want to be able to learn more about how all these market moves affect your retirement, make sure to follow along. I post updates every couple of weeks. And if you're nervous about all the stuff going on in the world and in our financial markets, and you're trying to figure out what you should be doing for your own retirement, feel free to get a copy of my book down below. It's called Launch Your Retirement, a Financial Planning Guide. to go from saver to spender and learn what we're doing with our clients to navigate all this uncertainty. I'll see you on the next update.